Okay everyone, drop what you're doing. Swift just ran a test with XRP and nobody really noticed it. And you know what? XRP wasn't the only one in there. Hedera, Quant, and Algorand were part of it too. All those ISO 2022 tokens. What I'm going to show you in this video is totally changing the whole global payments world right now. Let's get straight into it. And let me say this as clear as I can. Swift has already tested its ISO 2022 system with XRP, XLM, Algorand, HBAR, and Quant. Not just thinking about testing, not checking it out, they already did it. This is the moment when the old financial systems, the ones that move trillions of dollars every day, finally admit there's a new internet of value. And listen to this quote straight from them. It says, "Industry observers expect that by January of 2026, further integration of central bank digital currencies and tokenized assets will take place, potentially supporting new models of digital transactions and cross-network interoperability." What does all that mean? It's just a fancy way of saying the biggest banks in the world are getting ready for a fully tokenized money system, and XRP is right at the center of the test group. This is the real moment when ideas turn into actual practice, and Swift is testing with XRP. It means 1. Banks are getting ready for systems that work together. Number 2, banks are getting ready for tokenization. And number 3, banks are getting ready for liquidity bridges. This is the sign. This is the big change. This is why the XRP community has been yelling about this for years, but now it's happening out in the open. And before we go to the next part, this is the most important thing. If you want updates like this as soon as they drop, they come in my free crypto newsletter. Put your email down below, sign up for it. And listen, if you want clear direction, a real plan to get yourself in position, book that one-on-one call. Only if you're serious though. If you're not serious, don't book it. Links are below. Now let's get back to the wild stuff. Japan just approved a 21.3 trillion yen stimulus package. That's 135 billion USD. Think about that for a second. Traders all over the world are super alert right now. They're watching for yen intervention. Whenever a government has to prop up its currency like that, it means something deep down is starting to crack. A stimulus this huge, guys, let's be real, that's not normal. It's not calm, it's not under control. It screams that the system is wobbling and we're just trying to keep everything from falling. And this connects straight to the next thing, the part people really need to get, which is right here. This is the global financial system cracking big time in Tokyo. We talked about this a bit in the other video. If you didn't see it, go watch it. And if you haven't hit the thumbs up yet, hey, do it for me. The more likes we get, the more YouTube pushes this out. Look, Japan's 30-year bond yield hit 3.41%, the highest since 1999. It sounds like no big deal because a lot of people don't really get what that means or how it affects things, right? But when we look closer, Japan owes 230% of its GDP, the most debt of any country ever in history. They managed to survive for 35 years by borrowing at almost zero interest rates. I wish I could borrow money at almost zero rates. Sounds awesome. But guess what? That party is over. Inflation is up. Bond yields are going through the roof. China is getting more aggressive with Japan. And defense spending is shooting up fast. The Bank of Japan, like we talked about, only has two real choices, right? They can raise rates and destroy the debt market, or they can keep rates low and destroy savings with inflation. They're gonna pick option 2. But here's the part that should totally scare Wall Street, because every big bank, every big hedge fund, and all the institutions have spent 3 decades borrowing cheap yen and putting it somewhere else. The carry trade. It could be worth anywhere from $350 billion to $4 trillion. Nobody knows the exact number. If Japan's system breaks, that money is gonna rush out, and it's gonna rush out fast. Last time we saw a little taste, Nike stock fell 12.4%. The Nasdaq dropped 13%. This wasn't the main event, this was just the preview, right? The numbers on this are honestly scary. It might keep you awake at night. So every 0.5% interest rate increase costs them $45 billion more in debt payments. So every 0.5% hike means $45 billion extra in debt costs. At today's yields, 10% of all tax money goes just to interest. That's the point where it turns into a death spiral. The yen is at 157 per USD right now. If it gets to say 152, the carry trade stops making money. Unwinding starts. It begins. Emerging markets could drop 10 to 15%. The Nasdaq 12 to 20%. The Bank of Japan meets December 18th to 19th. This is now a huge global trigger. If they raise rates, volatility goes crazy. If they don't, inflation explodes. This isn't just a recession, guys. This is a changing of the guard. The liquidity machine of the last 30 years just stopped working. And when liquidity dries up, guess what? People rush to non-government assets like crypto, XRP, Bitcoin, Ethereum, Chainlink, Ono, all of them. This is all connected. But then we got this because Dom shared this. This is awesome. Let's step back for a second though, because nobody in crypto, what I've learned in my 8 years in this market is that nobody in crypto likes stepping back. They love zooming in. They love staring at the 1 minute, 15 minute, 60-minute charts. I don't know why. It just makes you crazy. Maybe they like seeing those big green candles. I don't know. Back in April, we looked at a Bitcoin cycle, or Dom looked at his Bitcoin cycle, and he put all the different parabolic curves on top, leading to day 1060. You can see the red line, that's the 2018 cycle. The blue is 2015. Most of you probably weren't here. I wasn't even here. And the green is 2022. Everyone was saying the markets are acting strange this year. 8 months later, guess what? It actually happened almost exactly like that. The pattern is there, the behavior is there, the timing is there too. The only thing missing, can you guess what the only thing missing is before I say it? It is the final big parabolic jump in the last 2 months before day 1060 comes. And guess what window is opening right now? This is the toughest mental part in crypto. Half the people think the cycle is broken. The other half know it's happening just like always. But the next part is gonna shock you because while regular people panic, guess what? Someone just put in a $377 million buy order on Bitcoin. It's not regular people, everyone. 377 million. Guess what? It's not coming from retail. I can't say that enough. Nobody drops almost $500 million unless they know something, right? Smart money doesn't chase hype. Smart money gets in position early for big shifts. Smart money moves quietly while everyone else is scared. This is a bet on what's coming. This is a bet on the cycle. This is a bet on liquidity moving around. And XRP, well, sorry to say it's part of that move too, everyone. And what I'm about to show you, well, guess what? This proves feelings are flipping fast. Tom Lee, he just shared more thoughts on set. He's like, hey look, ETH's bottom is in, and the recovery to all-time highs is going to be faster than the drop. Listen to him. That's the low. And Ethereum bottoms at 2,500. The recovery from there to all-time highs will be faster than the decline. That's what happened in every crypto decline. What you have is all this built-up energy. People are sitting and waiting, and there's panic selling, forced sellers. But the buyers are being patient. That's what will happen. And again, you guys kind of hit it on the head. MicroStrategy is probably the most important stock to watch right now because that is the Bitcoin proxy. It's the most liquid name. It seems to me that when in the crypto world, when they're trying to hedge their longs in Bitcoin and Ethereum, they can't find any other way to hedge it except shorting the liquid stocks that's them strategies. That this is one of, if not the most important interviews I've done this year. And that's respectfully to every other guest we've had on this fine network and fine show because I want to dive in a little bit deeper to what you're saying that basically there's some kind of a software coding problem that's causing a lot of this. Let's bring up, guys, if we can MSTR, that is the company formerly known as MicroStrategy, now just known as Strategy. The stock's down 50% in 3 months, Tom. It's down about 65% from its highs in the middle of July. Works, or people think they do, but inside that engine there are gears, there are pistons, there are things that are occurring that for 99.9% of our audience, they don't do this for a living. We get it. This is a really important interview. I'm going to let you go, Tom. We are watching MicroStrategy or Strategy. We're watching Bitcoin and we're watching possibly 77,000, which you think might be kind of a washout period, correct? Yeah, that's right. Tom DeMar, who is an advisor to Betin, really giving us a lot of insights. Yeah. He's watching that actually. MicroStrategy at this level here probably is when you want to ratchet into the longs. And Bitcoin may be just a few $1,000s lower. We might be at a bottom for Strategy. Yeah. Well, there you go. I hope Strategy's at a bottom. Look, very bullish interview, right? It's hard to call a bottom, especially when we make YouTube videos, because if I tell you the bottom's at 85 and it goes to 849, you're gonna be like, you missed it, you were wrong. We don't call bottoms around here. What we do is we try to DCA in as close as we can get to the bottom, but make no mistake about this. When big ones like Bitcoin and ETH start moving, your utility assets, your settlement assets, your interoperability assets, they're gonna move too. And then Jim Cramer, he told us everything we wanted to hear today. Listen, Bitcoin get 81, and you're looking at it, what I regard as being the single worst moment in this decline was the moment between 3:30 and 4:30, and then Williams comes on and then suddenly everything's fine. I don't think so. You don't think everything's fine? No, there's a lot of people have to get out, let them get out. This is not what suddenly they wave a magic wand. We obviously have real issues. We have issues with the building out the data center unlimited. We have issues with a lot of people. I don't know about you, but I like when Cramer is bearish. I call him Cramer. Maybe I want a coffee. I like when Cramer is bearish. Kramer bearish means we're bullish. Kramer bullish means you better get out because we're about to go bearish. Look, everything we just talked about, from Swift testing XRP, Japan shaking the global system, Bitcoin cycles still lining up, whales buying hundreds of millions, Ethereum bottoming, XRP getting close to its bottom, feelings turning bullish, Kramer yelling bear market. It all points to the same thing. A big move is coming. Whether that move happens this year, first quarter next year, or second quarter when Trump hands out stimulus checks, all we know is it is coming. And people want to say, I can't handle the weight. Well, if you can't handle the weight, you know what you can do? You can do what every other American in crypto or not in crypto is doing. They go work 9 to 5 for the next 30 to 40 to 50 years until they can retire. If you can't handle waiting another 3, 6, 12, 24, 36, 60 months, well, folks, you have another path. And that path is called the stock market. It's called retirement. It is called working for 30 to 40 years at a desk job you're not passionate about. Crypto is the ultimate shortcut in life. Make no mistake about that. Sometimes you just gotta wait. I've been waiting 8 years. I'm ready to wait as long as it takes because I know it's not gonna be me waiting 30 to 40 years for a retirement plan at work where you can only put in $23,500 per year because they want you stuck in the system. XRP doesn't play that game. You shouldn't play that game either. We are here before the big institutions, and you should be proud of yourself for that. And I've told you before, and I'll keep telling you, they will try to shake you out every single minute of every single day. Do not fall for the trap. You know what you hold. You see that Swift is testing it. If you need more conviction, if you need some extra research or someone to talk you off the ledge, hey, we got one-on-one calls. Book them up. If you just want the free newsletter, go sign up for that too. I'm gonna stop right there. I hope you liked it. Hit that thumbs up. Make sure you're subscribed. Catch you all later.